big move happening on that front. Big move in ICICI Bank as well, actually, in the last half an hour. That is really the stock that, along with Reliance, has carried this market forward. We now have our next guest joining us. Gautam Duggad is joining us, Head of Institutional Equities Research at Motilal Oswal Financial Services, from the sidelines of the Resurgent India Conference. Gautam, good afternoon. The market is definitely resurgent. The best performing market today is the Indian market. What's your sense? Is this market finally going to break out? Is that the sense that you get?
Hi Anush, good afternoon. Last 2 days have been quite strong in the sense that we didn't have too much of a global support yesterday and today. And on the back of a lot of geopolitical headwinds, given the way China situation is panning out, I think in that context, the way market has performed over the last 2-3 days, clearly showing a lot of strength. And over the last 1 week, I've had a chance to attend quite a few corporate meetings at our conference. Clearly, the mood is more about recovery, demand coming back, lending restarting. Quite a few corporates are making positive commentary out there. So clearly, a month back when we were wondering about how things will unfold, and last 30 days, clearly quite a few things have changed, at least as far as perception is concerned. And then, of course, we underestimate the importance of liquidity a lot of times. That is also helping at the margin. So clearly, we have seen a lot of recovery back from 7,500 to almost 10,200. That's a pretty phenomenal move in the last 2 months. But we also need to remember that we have still underperformed the global markets, both in CY19 and on that underperformance, CY20 also, that underperformance is continuing. So one needs to see how the earnings eventually pan out, because eventually that is what is going to drive the markets after a certain level. We cannot remain, casual about earnings for a long period of time, because we know last 5-6 years we've hardly seen any earnings growth, and now the so-called earnings recovery has been pushed back by another year. But if this is a short-term shock, and if we start seeing things falling back into normalcy, say after 3 months, 6 months, then who's to say people may even forget this period.
Okay, Gautam, good afternoon. Thanks for joining us on the show. I've got to talk to you about what else. I mean, it's a stock that's also among your, high conviction ideas, your top picks in the large cap space, Reliance Industries. The speed at which things have happened, Gautam, and the question is now what? Everybody's been thinking the rally would be over. People have been saying that from 1400, 1450 onwards, but it just continues. So that tells you how little we know about the future. But on a serious note, what has actually happened is when the narrative about deleveraging started, none of us could even imagine that this will happen so soon. And now you're also seeing some of the fundamentals as far as telecom is concerned coming back into place. Suddenly, the legal issues do not seem as severe. Of course, nobody can predict how the things will shape out there. But incrementally, I think that the things have turned out relatively better than what the market was fearing. And in fact, you've seen movement in even a stock like Idea over the last 1 month. So clearly, Reliance right now is going through a lot of sweet spot, deleveraging, telecom ARPUs going up, and consolidation being the name of the game of that industry. And clearly, it is one industry apart from pharma which has not seen much of an impact of COVID. So, it's very tough to forecast for such stocks where things will stop or where things will come to an end. But what fact remains that it's a confluence of multiple positive factors as far as Reliance is concerned. And we continue to maintain the positive view, but obviously, as stock keeps rallying, the potential upside also comes off. So at some point of time, it may consolidate and have some time correction. But fundamentally, things look quite strong for them.
Yeah, what a move it's been for Reliance now. I mean, up 8% today. And in fact, just look at the monthly move. It's now approaching 20% for the month on Reliance. And we have a market cap which is approaching 11 lakh crores on the stock. And from the time of the Facebook deal, I mean, it's just been phenomenal the way that stock has moved. Just try to get those numbers in place as well. But I think it was somewhere around 1100 if I'm not wrong at that point, and since then just one way move 1765 on that. The other space which is making a big comeback, Gautam, is NBFCs, names like Bajaj Finance in particular. You have a lot of companies attending in your conference from this space. In fact, a lot of NBFCs. Your thoughts on this whole rally?
This is a space which has been beaten down the most and nobody wanted to touch it. So even after the recent rally, the stocks are convenient at least 50-60% below the recent highs. Now what is happening out there is incrementally post-May, the corporate commentary has started turning slightly better, as far as collection is concerned, as far as disbursement is concerned. You are hearing some positive noises out there. Plus, the liquidity has also become a little less of a problem. It's still a problem, but not as big as it was, say, 45 days back. And at the same time, cost of fund is also stabilizing. Most of the stocks, barring HDFC and Bajaj Finance, and of course Muthoot now, are trading at valuations which are not exorbitant. So some of the value buying has been seen out there. But from our perspective, we still feel that it is better to be in the large cap banks within the BFSI space, because we still don't know how demand will shape up in the period of next 3 to 6 months, how consumption will happen, especially the leverage consumption. And then, of course, you have asset quality related issues which can come back with a lag. So it is better to be safe right now than be adventurous as far as the BFSI space is concerned. From a house point of view, our preference has been large cap private banks, whether it is ICICI Bank, HDFC Bank, or Kotak or Axis. And then within the NBFC space, our top idea has been HDFC Limited.
Okay, Gautam, got that. Better to be safe and be with larger NBFCs, that's the word. Gautam, I'm looking at the list of companies that attended your conference, and there are lots of names here. A couple of auto names, the names are also on a screen. Hero Moto, Motherson, there's M&M, there are the financiers, you've got some of the consumer names from the durable side like CG Consumer, etc. My simple question, which company sounded most optimistic to you about a revival in demand?
Surbi, what we are witnessing across consumer companies, be it staple or discretionaries like automobiles, durables, or even Titan, they also presented at our conference today. The rural oriented stories are clearly doing phenomenally well. In fact, that's why we like M&M out there. Whether you listen to the commentary of Hindustan Lever or Dabur or Escorts, M&M, and other set of companies within the consumer pack, clearly there is no doubt about it that rural seems to be doing far better than urban. Almost 100 out of 100 companies would tell you this narrative right now. So clearly the companies which have a slightly higher orientation of rural revenues coming for them from rural or semi-urban market, they're going to benefit. Yesterday Hero mentioned that the top 10 cities, while they contribute 70% of the COVID cases, for Hero, those 10 cities are just about 10% of the volumes. So therefore, they are seeing 70-75% of the pre-COVID demand back already, while 95% of their dealerships are open. So again, it depends which company you are looking at rather than sector, because even within sector, if you see different companies, they have very different narratives. So from a commonality point of view, at the moment, rural seems to be the flavor. Their things are far better because they are less impacted. And from a region point of view, West seems to be the most impacted region. So any companies, any sector which has a very high contribution coming from Western India are clearly finding it slightly difficult. That's what some of the cement companies which presented at our conference alluded to. So and of course, the third point related to that is the value for money versus the premiumization. We all have been talking ad nauseum about premiumization for last 5 to 6 years. It seems that there is some halt in that trend right now for the next couple of quarters at least, because the consumer is trying to conserve the cash and save some cost for himself or herself. So clearly companies which have a slightly higher proportion of value for money oriented portfolios, they seems to be having a slightly upper hand right now rather than the ones which have a very high ticket and a discretionary sort of category present in their portfolio.
Okay, by the way, someone's reminded me as soon as I said it, yeah, it was 1180 that day when the Facebook investment did come into Reliance, or the news came in. So 50% move in India's largest stock ever since that day. Been just phenomenal. Before we let you go, since your conference was titled Restarting India, we've discussed the rural theme. What about the urban theme? Especially names like PVR. I don't know. They can be Titan. They can be Jubilant. There's so many names. Of course, PVR being the most important one out there, because that's where the business is still closed. But once we reopen, do you think these stocks can go back and reclaim their old glory?
Anuj, it's quite tough to predict right now, because even if you reopen, say in next 3 months, in a phase-wise manner, how the consumer out there behaves, whether she goes out and consumes, or there is a fear that is prevailing even at that point of time, and therefore that shapes the consumer behavior and demand. That will have a huge repercussion for a lot of these companies which are a play on hospitality or multiplexes or aviation. The third, Jubilant and Titan, the names that you mentioned, clearly they seem to be having a little less of a problem, because like Titan mentioned, large part of the jewelry demand in India, in fact 850-900 tons that we consume annually, 60 to 65% of that comes from wedding. So while wedding might have been postponed, but the demand is not lost forever. Whenever that wedding happens, whether in July, August or September, that demand is going to come back for them. But in some of the other cases like Jubilant or PVR, the consumption lost cannot be recouped. So relatively, if you ask me where do our preferences lie, and this has been our positioning for last 3 years now, we continue to like Titan in the discretionary space, and instead of PVR or Jubilant or Indigo, right now our preference is more towards durables like Crompton Consumer or Voltas, because by and large, I think even post-COVID, I think the theme of big getting bigger and the value migration towards the organized segment, I think that is going to come back with vengeance, because all the smaller guys, even within the organized space, the smaller regional guys are facing balance sheet issues. Bankers are not willing to lend to them. I mean, a company like Astral yesterday very clearly mentioned in our conference that the bigger guys in multiple consumer categories are going to have a significant advantage as and when things normalize. So we will rather continue to have that positioning in our portfolio, where within consumer or within non-consumer space also, larger companies, branded, and in the region, in the organized space, we clearly see market share and profit pool shifting incrementally towards them.
Okay, Gautam, good talking to you as always. Thank you very much. Have a restful weekend after your conference, and we hope to connect with you again in the coming weeks. Well, let's just get the eye back on the screen, which has been absolutely sizzling. I mean, 10,000 to